First, we have David Townsend. David is the Chief Executive Officer of Missouri-based Agents National Title Insurance Company. And we also have Craig Haskins, who is Executive Vice President of Nightberry Title, which is based in Wisconsin. And both of today's speakers are members of Alta's Best Practices Task Force and have been actively involved in the development of the policies and procedures and will be able to provide some great insight for today's discussion. Thank you both for joining us today.
Thank you, Jeremy. We're excited to hopefully educate some of the members of Alta on some of the best practices, specifically implementing the policy production, delivery, reporting, and remittance procedures. And once again, I'd like to thank SoftPro for making all this possible in a free environment. Without great sponsors, we don't have opportunities like this. So thank you again to them for providing this to all of you.
And David will be starting the conversation. He'll provide an overview of what's in this best practice, and then Craig will dig into implementation. David, I think you might have already had the mic, but it's yours again.
Okay, thanks. If you'd jump on to the next slide, Jeremy, that'd be great.
Should have went. There you go.
Okay, there's a little latency, so is it moving for everyone else?
No.
I am still seeing best practices.
The cover slide.
I'm still seeing the cover slide.
Yeah, but we could. It was emailed out, and there's not a whole heck of a lot of content in the slide, so we can probably just go without until those slides go a little quicker.
Oh, here we go. Okay. All right, guys. The Alta best practice for this topic is adopt and maintain written procedures related to title policy production, delivery, reporting, and premium remittance. And as pretty obviously stated, the purpose is appropriate procedures for production, delivery, and remittance of title insurance policies. Ensures title companies meet their legal and contractual obligations. One thing with title is our actual product for the industry is the title insurance policy, and a lot goes into that. The search and exam, commitment, the closing. Unfortunately, sometimes policies are not sent to the consumer or the lender in a timely manner, and in the past, our industry has not had the best track record of getting policies out in a timely manner. And as a result, we've had some, concerns have been addressed with us from regulators and from lenders alike. In that, why can't you get your policies out fast enough? And some of it is a volume issue. Some of it is, are we closing them? Are they being closed outside the office? But a lot of it is, how are we automated, and do we have procedures, and are we following those procedures for the actual title policy production? It's one thing to do the policy, but it's another thing to actually get that sent to the consumer or the lender and document when it was sent. Once that is out, then you also must report that to your underwriter and then remit. There's a lot of things that go into that, and either contractually or statutorily, there are certain duties that are placed on title agencies and direct operations for getting policies out in a timely manner and reporting those to their underwriter. So under this Alta best practice, it's very holistic in nature, in that it's not just simply doing your policies, but it's also reporting and providing copies to certain parties. Craig, anything you'd want to add in regard to the purpose and the overall best practice?
No, I think you did a good job summarizing that. If we could slide into the next one. In fact, one more, Jeremy. That's sort of another slide that recaps. Let's talk about policy production and delivery. The bullet here that I'd like to talk about quickly is that, like David just mentioned, getting them out quickly to not only meet statutory, regulatory, contractual obligations, but just to be a well-rounded title company and get your policies in and out on a timely basis, or a timely manner. The bigger, more important bullet here on the screen is that you issue them within 30 days of settlement if the terms and conditions of title have been satisfied. So this is something that we've spent a lot of time discussing, because 30 days from what is the question you're probably all wondering. It says 30 days of settlement there, but we're trying to address right now, what if you didn't handle the settlement? What if you're the title agent and the settlement was handled by someone else? And the docs are recorded or sent to you, 20 days after settlement. Does that mean you have 10 days to do all of the work to get your policies issued? And I would opine that it doesn't mean that. I think what we're trying to do is clarify that the 30-day clock starts from when all matters have been cleared to make it able for you to issue the policy. So if a mortgage lien hasn't been released, deed of trust hasn't been released, or there's documents that are supposed to be recorded that are called for on the commitment haven't been recorded yet, your clock doesn't start until all of those hurdles have been cleared. And then at that point, you have 30 days to issue the policy. Now, why 30 days? And what's the deal? What's the big deal? My customers haven't complained about my slow policy turn time, so why am I all of a sudden subject to 30 days? Well, part of the intro that we may have glossed over, or may not have forgotten to, is that the Consumer Financial Protection Bureau is reminding lenders that they're responsible for the actions of their vendors. And we happen to be a pretty interesting vendor for a lender, and as part of that, lenders are tightening up so that there's a standard of which title agencies can follow. And this is one of them. I think a 30-day standard is somewhat reasonable, especially since we can rework this so that the clock starts after the last hurdle's been cleared. Let's see. Policy reporting, the next slide here. David, anything to add to that one?
Well, here's the thing. There are some states that have, I know, take Missouri for example, the statute of Missouri says it is you must issue all policies 45 days from the date, no later than 45 days from the date the last requirement is met on the commitment. You might ask yourself, well, if my state statute says 45, why should I do it in 30? Because these are best practices. This is not minimum standards. This is if you want to do it the best way possible, and how to meet the, how to really protect the lender and be the best service provider you can be. This isn't somewhat acceptable practices. This is the best practices. Just because your state says you can do it in 45 days, we want to strive for 30. The sooner the better to get these out. Your underwriter might have, there might not be anything in your underwriter contract as far as getting policies out. They might say as soon as the commitments, all the items on the commitment are met on the requirements. So it's something where you want to meet those requirements, but we kind of want to go above and beyond on this, because there are so many people in our industry doing things well and better than the minimum standards. And that's what we're trying to strive for here, is to elevate the overall level of professionalism in the industry for settlement service providers.
And when
go ahead, Greg.
Oh, I was going to say, when I've given presentations already on best practices to some lenders, this best practice number 5 is the one where their eyes light up a little bit, because it's sort of us saying, if you're dealing with title agencies that comply with and that have a certificate that maybe we can touch on a little later, that says they're certified as a best practice, or they're certified that they've met the best practice standard, those lenders will be pretty excited to know that if they deal with your agency, your policies are going to be delivered within 30 days. So this is the best practice that if I'm speaking to a lender group, once I start to lose them, I skip right to number 5, and boy, do they perk up knowing that they don't have to chase title companies months and sometimes years after the closing. I also wanted to mention that the 30 days it's different than the policy lag time. I know underwriters sometimes often give you a report card or a grade on how your agency's lag time is, and I believe that's typically based on the policy's effective date, which is the date of settlement, usually. This is different than that, so you can't just look at your lag time and figure out if that's your 30-day window. So I wanted to make sure that there was a distinguish between the two there.
Hey guys, before we
Yes.
move on, let me back up on a slide. We had a question from Laura, and on the slide it says develop a mechanism to track when the insured receives the policy. Maybe Craig, how do you track this, or how do you know when the policy is received by the insured?
Good question. We have a couple mechanisms. Some in lenders, well, homeowners, we have a couple different versions of giving them the policy. Sometimes in some states that we're in, we issue a policy at the closing table and hand the policy to the buyer that in a folder with all their copies of docs they signed and whatnot. So that's from the consumer. Otherwise, if we mail the policy to the consumer at their new house, we mark inside of our folder, or inside of, we're pretty paperless, so we'd mark in the actual electronic file that we mailed it on May 16th, 2013. So that's one of the tracking. Some lenders, we upload policies directly into their servers, and the computers track the very second in time that the files were uploaded. Sometimes we hand people thumb drives or CDs with policies on them. So it just varies. I just think that part of the important part of best practices too is just, if you haven't figured it out by reading yet, it's basically documentation. We need to better document how we run our title agencies, and this one's a pretty easy one. If you mailed it, mark it somewhere in your file that you've mailed it, and that's the mechanism I think that would comply with best practices. Or if you have an electronic version, obviously your computer can track when those are delivered. Did I touch on that good enough for you, David?
Yeah, in fact, we talk about this for multiple sizes of agencies. If you're a smaller agent that has one or two people and you want another low-tech option for this, if you simply note in your file, policy was mailed on this date to this address as provided by the consumer, or policy was mailed to lender on this date, or it was sent back in this packet, as long as you document it and there's somewhere to go back on that. It's not like you have to send them certified mail or have to get read receipts. It's have a policy for documenting when the policy was sent. And it's something where, as we all know, lenders might still receive the policy, but they might not have it because they might lose it. It might get put in the wrong file or something like that. So as long as you're documenting on your side, it was sent to the lender at this address, or it was sent to the consumer or handed to the consumer, document it on your side and be consistent in that documentation. Don't just write a note on the inside of your folder unless you have a pre-printed folder that has all the checklist, and that part of that checklist is policy delivery. Have a procedure for it and maintain that, and make sure you're consistent. If you have 5 different ways of sending it out, document what way you send it out. It doesn't have to be high-tech where you're uploading it to an e-link system or something like that. If it's simply you walked across the street and delivered the policies from the last 30 days to the lender, that's acceptable, but just document it and be consistent. I think with a lot of this, it's consistency is the key. And as long as you have the proper procedures and you follow those procedures, that is what the lender is going to care about.
Yeah, I want to just add that documentation is the key, and I know this isn't best practice number 4, but on best practice 4, dealing with recording procedures, it talks about tracking things and tracking when you sent the document to the rejecter of deeds or the register of deeds, and when they rejected it, and then when you resubmitted it. So it would be the same here. You delivered the policy to the lender on the 16th of May, 2013. Guess what? You have to deliver it again in August because they lost it. And guess what? Right after Christmas, they'll ask you again for it, and you'll just keep documenting that you've delivered it. So there, I threw the lenders under the bus, but hopefully it's a title joke that most of us kind of get. I want to, before we move on to reporting and remitting, David, if you don't mind, I'd like to share a few ideas that our company uses to keep our policies in that 30-day threshold.
That would be great. No, I'd love to hear them.
Okay, so let's just take, and I'm going to stay out of the commercial market. I'm going to stay out of the confusing, the difficult transactions. I'm just going to stick to residential refinances and residential home purchases, just for purpose of this conversation, because there's a million what-ifs in those other types. So, residential refinances that our company closes, or that your company closes, we issue probably, I would guess, over 95% of our residential loan policies are short-form policies, and the ones that we close in-house, we issue them at the table and deliver them back to the lender with the loan package. And that has drastically reduced our turn time to lenders. First of all, the person that's most, and okay, let me just explain how we do that, because some of the questions that are going to pop up are going to say, well, how do you do that? If the policy person is busy and the closer's in the closing room, how do you do that? So, and this might vary from state to state, but in the states that we operate in, our closers also have a license, if you will. I know it's different in many states, a title examiner license. So they get the training, they do the continuing ed classes to understand enough about title to be dangerous. For instance, we're not asking them to search or examine title. We're asking our closers at the closing room table, if you've paid off item 15, which is a mortgage on a commitment, and if you've paid off the balance of the taxes, simply remove them from the file, from the commitment, and issue the policy without them. If you're most software, including SoftPro, who's the sponsor here, you can issue a policy, you can delete out those mortgages and whatnot that you've cured at the closing table, and you can have it spit out the policy. The information that the policy is going to want to know is what the loan number is, make sure you have the loan amount right, spell the lender's name correctly, and then basically all the softwares that are out there can spit out the final policy. And who knows best as to what's being removed from the commitment for the policy other than the closing agent, if that works in your state. So in our state it does. Our closers know better than anyone else what's been taken care of and cleared and cured from the commitment, and allows them to issue it, sign it, add it into the original loan docs, and send it back to the lender. So the first thing when the lender opens our FedEx package, the first thing on the top is the final policy. We get tons of feedback, and national, local, regional lenders, almost all of them appreciate and accept them, and it really helps us to keep our turn time down. Now you do have to, one of the caveats, or one of the problems, I won't say problems, but one of the challenges is to make sure you've got good closers that can understand enough about title to be dangerous. They don't need to know how to insure an easement that runs from Walgreens across Walmart or something like that. But they do need to know enough to be able to sign off on policies, and that will vary from state to state. So that's what we do for short-form loan policies at the table. Same concept for short-form owner's policies. Clear off the items that have been paid, make sure the recordings look good, and issue the policy. So that should help. The other thing that we also do is we don't, in most states, you don't have to wait for all of the releases to be recorded. If you were involved with the closing and you know that you received a payoff, and you know how to add per diem, you know how to cut a check, and you dumped it in the FedEx, and you've tracked it, and your check is cleared, and you know that the lien's been paid off, you should be in a safe position to issue your policy prior to the lien being released. And that also helps us to cut down on the turn time of our policy issuance. Now, again, there's 49 states that are probably listening in, and it might be different from state to state, but some form of that should work in every state.
Hey, Craig?
And if you have questions about that, just contact your underwriter and ask them what they will allow as far as that goes.
And Craig, there was a question submitted along that same vein. What if the lender handles their own closing and never clears the prior lien? What is a good rule of thumb for issuing policies in those cases?
Well, then you don't have many options. In that case, you issued a commitment. It closed on the 1st. The lender probably got around to sending you the original docs, your premium, title affidavits, and whatnot for recording. sometime after the first week or so, and then you're simply waiting on the lien the lender paid off directly. You're simply waiting on that lien release. If you have a very good relationship with your underwriter, and that underwriter has a very good relationship with the lender, maybe you can work out some type of a deal with the lender and the underwriter to allow you to get enough information to know that the loan has been paid off, but the lien's in processing. Maybe the lender can give you a copy of the HUD and the copy of the check that was sent and a copy of the letter saying, hey, I'm the big bad bank, and we've wired the money or sent the payoff in, and it's been months and months and months and months, and we still don't have our policy because this other lender hasn't issued a release. Maybe you can work something out with your underwriter. But in those situations, yeah, those are the ones where your 30-day clock doesn't start until that last hurdle's been met or been cleared.
Great information there, Craig. That I think that's be very helpful. All right, do we want to move on to the next slide here? I think we're going to talk about.
So we've issued the policy now.
Yep, we've issued the policy, and we're talking about policy reporting at this point. Guys, underwriters have, there's certain obligations that underwriters have as far as accounting goes, that it's critical that once you report that policy to the underwriter then, per statutory accounting rules, must be paid within 90 days, or that underwriter cannot consider that an asset on their books. Some states require underwriters by statute to be paid within 60 days or shorter. Your contract might even say 30 days. It's really important that once you have issued that policy and reported it to the underwriter, that you timely remit the money to the underwriter. Regulators look at this as very carefully to make sure that the solvency of the underwriter is maintained, and it's critical. And it's something where the money that is held by an agent is held in trust. If you look at the contracts that each of you have as a title agent, it wouldn't surprise me if it didn't say that you are to hold the money in trust for the benefit of the underwriter. So that's why it's really important to report those and transmit the, get the remittance in and report very quickly. Oh, go ahead, Craig.
I was just going to, if you're on the same line of thought, go ahead. I was just going to discuss the transmitting of the actual copy of the policy to the underwriters. That's the second bullet on the screen here.
Yeah, and that's what I was going to go to was getting the images to the underwriter, talking about a standard format. That's going to be between you and your underwriter, how they want you to send those documents in. And this, Craig and I both know that this has been one of the stickier points on the best practices in that, why does the underwriter, what are they going to do with my Schedule A and B once I submit it to them? Guys, regulators, the question has been asked, underwriters, do you have a copy of the policy that you're insuring? No, the agent has it. Well, why don't you have a copy? You're the insurer. You have to have a copy of this. If agents close, underwriters must, if the lender needs a copy of a policy or needs the policy, they want to be able to go to the underwriter directly and be able to get that policy quickly. So it's something where providing policy data and images of that policy help not only with the regulators and the lenders, but also in claim situations. So it's critical to work with your underwriter to establish procedures for providing them with the policy information, either via a data exchange, providing them with imaged copies, or if the underwriter wants paper copies. But it's going to be between you and your underwriter how you work that out.
Yeah, this is one that I've been arguing about since best practices, since it was first written, and I think I can get around or get over it. First of all, our agency is 160 years old. My family's owned it since 1979. We've never once given a copy of a policy to an underwriter. Some states you're required to, but most states you're not. And many people on the phone right now are saying, well, we've never given a copy of the policy, including Schedule A and B in the endorsements, to the underwriter either. And the reason we haven't is we've never been asked to. If there's a claim, the underwriter calls me and says, send me a copy of the file, and we scan and email a copy of the file or to the underwriter, and that's about it. But what about if an agency goes out of business? Who does the underwriter call in 2018 when there's a claim? If the agent's gone and if the underwriter hasn't gone out and picked up and collected their policies. So the issue, and I mean that's one issue, and I can argue about that one forever, but the main question from a regulator is how could you be the only insurance line in the entire insurance industry that you have no idea what the policy that your agents are issuing? How is that? So that's a hard question to answer, and I haven't really come up with a good answer for that one either. And that leaves the last portion of this question to, I compete against and this is just me generalizing, I compete against my underwriter. Why would I want to give them my title policies? Couldn't they just create their own database of my policies and compete against me with my own tools, my own work product that I've created? And that's an interesting question, and I think we're going to get a resolution from underwriters to state somehow with you in your own contract that the policies that you turn over to them as a copy to comply with best practices will only be used in a claim situation. So if you can contractually handle that between your agency and your underwriter, I think that might do the trick. You still have to figure out, how you're going to get the policies to them if you're techie enough to deliver a CD or upload or whatever, or if you're just going to mail a box of papers into your corporate office of your underwriter. That's between you and your underwriter. But a copy of the policy is something here that you're required to give reporting and a copy of it by the last day of the following month after the closing. So we have to speed up a little bit here, David. And the last one is, and then also submit the funds, your remittances to the underwriter at that same time period.
That is correct. Jeremy, with the premium remittance guys, it's something where you just need to work with your underwriter on that. I know a lot of underwriters have different ways with their online systems or paper jackets or reporting. It's important to make sure you're remitting that from a trust or premium account in a timely manner, because that is something that I know a lot of states are looking at that as well too, on where the funds going and what's happening. Do not use the money for your underwriter for payroll, which has happened in the past. So it's something that that the regulators are really taking a look at as well too.
And from a lender and regulator perspective, it's probably a good indication that there's a trouble at the agency if they're not issuing the policies quickly, they're not reporting them to the underwriter, and they're not paying the underwriter in a timely manner. It's probably a good red flag that there might be some problems with the agency. And I think that's where lenders and regulators are focusing on this particular set of best practices.
I would echo that. In many of the fraud situations that we have seen, there is a correlation between lack of policy issuance and slow pay to escrow fraud and fraud within the agency. Not saying it's causational, but there is a correlation there.
Jeremy, have there any other good questions been submitted? I see we're about 3 minutes over, but if there are some good questions, you might as well let David and I entertain these people for a while longer.
Sure, yeah, we are past half hour, but let's take a little time. We have a few more questions we haven't touched on yet. Craig, you were talking about the short form policy. Amy wanted to know what is the effective date for that policy. If it's at the closing.
I think Alta's standard short form policy's effective date is the date of settlement or date of recording, whichever is later, I believe. So if it's closing today on the 16th, the docs aren't recorded until the, let's say the 18th Friday, then the statement you would have right on the face of the policy would say the date of settlement, which is the 16th, or the date of recording, whichever's later. So Obviously, settlements track, recordings track. So if there's ever a claim, you'd be able to figure out real easily which one of those dates your effective date is.
Yeah,
so I believe that's standard.
Yeah, that's pretty standard, and that's a real good way to make sure that you are getting those policies out timely, is to use that. And that's also critical to touch on another best practice, that you are timely recording your documents, because if you are going to issue a short form at the closing table, you want to make sure that nothing's jumping in the gap there on that short form policy, and make sure you get it out there quickly, because you can avoid a lot of claims if you don't have an intervening document or judgment that pops up between the time you close and the time you record.
So you can issue a policy, without the documents being recorded?
Absolutely.
Correct.
And so Sharon had a follow-up question. Don't you need the book and page to include in the policy?
No, because the face of, and I'll just speak to the short form loan policy.
Yeah, this is, and yeah, like Craig's saying, this is only on the short form policy.
Yeah, the short form loan policy gives all of the information to tie in. Whatever the document that's going to be recorded is tied in on the short form policy on the face of it, so that you know exactly what instrument we're talking about. It probably has the loan number on it. It has the date the document was signed. It has the amount of the loan, the borrower's name, and the lender, all regurgitated right on Schedule A. So unless there's two identical loans recorded at the same time, I mean, the short form policy does a real good job of identifying it. Lenders will, I mean, I don't want to say all, because I don't like to use the word all, but I'm going to say it. All lenders that I deal with accept and understand that the short form policy does not, one of the benefits of it is you have it today. Hey, if you want to wait 30 days to get your long form policy just so you have the volume and page on it, fine with me. I'll issue it in 30 days. Or do you want it now, where it's tied in exactly to the loan that you're dealing with? Most lenders, when you explain that to them, they'll accept it. Heck, the only reason they need, I mean, the mortgage or the deed of trust after it's recorded is probably returned to the lender, so they'll have the volume, page, document number eventually. So I think, and that's just a way to speed up the policy. And heck, I love it because I don't have to have any post-closing labor to issue or type the policy. If you issue it at the closing table, you don't have to then touch the file again in 30 days to remember what was cleared, remember what was recorded, and then type something out and mail it out. It's done.
But just to reiterate, that's only on the short form loan policy.
That's right.
Yep.
And guys, we're getting a lot of questions about the short form. Tony Ann, she says in her past experience with this policy is that lenders then come back looking for an endorsement. What's been your experience using this form, Craig?
Well, the endorsements are built into the face of the short form policy. So all the standard lender residential endorsements are usually incorporated by reference on Schedule A. There are little check boxes that say, hey, if this box is checked, you have the Alta 9 version included automatically without that extra sheet of paper endorsement. If it's an endorsement, they'll come back later and add in the volume, book, page, document number. I mean, that defeats the whole purpose of the short form policy. They should be able to identify the actual recording with the policy just by all of the information that's typed on the front. But it sounds like maybe Alta should have a short form policy training session too. No, maybe not a training session, but an educational session if you've got a ton of short forms. Or go back to your agency reps in your states and say, get me up to speed on the short form. I'm telling you, it's the best thing we've ever done. It keeps our lenders are super happy. They get the policies right away. Our underwriters are thrilled because they don't have to chase us down for being slow remitters or slow issuers. And I'm happy as an agency manager owner that I don't have a zillion hours of labor a month after the closing because the policy's already been issued and out.
Well,
and to follow up on that question, Jeremy, if it sounds like her question is that the lender asks afterwards for endorsement stating what the recording information is, that's a great opportunity for you to educate your lender on the actual policy form, because probably what's happening is it's just somebody in their processing department that does not realize what the short form policy states. And it'd be a great opportunity for you to work with that lender to explain to them what the short form policy covers, and then you become more of a resource for that lender.
And I'll just say one other thing on the short form, Jeremy, and then maybe you can yell out another question. But I will go on record saying that the short form policy is better than the long form policy. And the reason I say that is because you have the policy in your hand right now, and you don't have the long form policy in your hand right now. So it's got all the same coverages, same items covered, same exclusions, and similar exceptions, but you have it today versus the long form, which you have to wait on. So that's my final statement on short forms.
Well, it sounds like we have a good opportunity to provide some training on the short form, whether it's through a webinar or maybe at one of our conferences, such as the annual convention in October. Let's see. We had a question on agencies that outsource their policy production. Any thoughts on companies that do this?
Jeremy, I guess in what way? They're not offloading the burden by basically they're still held to the same standard. Simply because you outsource your policy production doesn't change your burden to meet this standard. So I think there's really no difference whether you are doing them in-house or outsourcing them. The burden remains the same.
Yeah, I think it's just like any other function, whether it's policy production or closings, notaries, you are still responsible, right?
And maybe it might help you speed things up if someone's typing them in the overnight hours while the rest of your employees are sleeping. Someone's typing a policy. Maybe it will help you comply. You'll have to investigate that on your own. But I agree with what David said.
All right, let's ask one more question, and then we will call it for the day. But there on the screen, if you do have any other questions that we didn't get to today, or if you have anything to follow up with, please email David or Craig, and in between their sarcasm, they will answer your question.
Yeah, I'm the one with Craig is the one with the more pure voice. David sounds like he's a pilot.
I may or may not be flying a plane as we speak.
But you did stay.
Last question, Jeremy.
Yeah, but you did stay at Holiday Inn. All right. Jennifer asks if are we not meeting the best practices if we do not submit a copy of the policy to our underwriter? Our underwriters have never asked for a copy of the policy. Craig, I think you.
Yeah, that will change. You will not be certified under best practice if you are not supplying a copy of the as of right now, as of the current writing of the best practices, and we've debated this on our best practice panel, and it's still in there. If you aren't submitting a copy of your policy to your underwriter, you will not receive a certification that you've met best practice number 5, which requires it. I don't know if underwriters are going to back down on this one, and my underwriters in Wisconsin here, they don't want them. They haven't asked for them. Maybe they want them now, but I think things are going to change as soon as everyone starts adopting best practices and the audit certificates programs start happening. You've got to give a copy of the policy. From one underwriter looked at us across the table and said it's a deal breaker if we don't keep that in there. So I would assume that's there to stay. As much as I don't like it, but I think it's there to stay.
I would echo Craig's comments. As an underwriter that's never requested them from our agents, that we have a good enough working relationship with our agents that if we need a copy of a policy, we call them and ask them. And if in the unfortunate situation where we have a closed agent, we obtain the files from that agent, and we've got the server space and warehouse to prove that we've got those, it's something we always relied on the agent to provide that copy. And if a lender ever called us, we made a call to the agent. But I understand where the lenders and the regulators are coming from, in that there are situations where if an agency is closed or if there's been a change in ownership, or sometimes underwriting relationships go south, and if that agent is not wanting to cooperate, that can happen as well too. And I see exactly where they're coming from, and it's a modernizing of the system. The CFPB is making life different for everybody, and this is just kind of the evolution of the process.
But I do think you can solve the two issues that I can think of. That I've listened to a million agents to give me their complaints, and I've echoed them with the same complaints. The two things: one, I don't want to box these up or scan these up because I've never had to do that. So that's the hard one. Two, I don't want my underwriters using all my prior work files. And I think, like I mentioned earlier, if you can get your contract amended to say that your underwriter will only use them for claims purposes, I'm betting that the underwriters will all be for that.
And put in there a liquidated damages clause that says if they use them for a starter, that they pay you $1,000 per file or something like that. I see that type of negotiation happening with throughout the country on this.
All right.
Hey, let's end that. Let's end that on a note where the agents get liquidated damages from their underwriter.
There you go.
As all the underwriters cringe. All right.
We have to be humorous, and obviously it's tongue in cheek. But
yes, definitely.
You told us to limit the humor.
Yeah, and we do realize that this is it's a sticking point between agents and underwriters, and there's always been a delicate balance there, and we realize that, and guys, don't think that this wasn't discussed at length with the best practices task force. So this is something that the concerns about this were voiced at the highest levels.
All right, thanks, guys. And as we mentioned again, the contact information for Craig and David's both on the screen. Both are on the ALTA Best Practice Task Force and are well versed on many aspects of the best practices. We have a lot of resources on best practices on our website. You can see the web address there. We've got recordings of our previous webinars, checklists, articles. So check that out if you're looking for additional information. Our next webinar will be June 12th at 2 p.m. and we will be talking about professional liability insurance and fidelity coverage. So be on the lookout for that registration information. With that will bring us to the conclusion of today's presentation. Craig and David, thanks again for joining us. And,
thank you.
And I hope, sorry, I cut you off there, Craig. Go ahead. Any parting adieus?
Nope, that's it. Thank you. Thanks for having me.
All right. I hope all the listeners found today's presentation useful. Take care, everyone.